$35 silver, $2,600 gold. That's my forecast for the 2024 precious metals prices. I believe especially silver will reach at least that level. But why? We're going to talk about why in this video, because there is so much going on in the world right now. We're going to build up the case as to why we could easily see $2,600 gold and $35 silver. Let's dig in right now because we've got a lot to cover and I got a flight to catch. First off, gold, silver, the bond market, inflation, recession. There is so much hitting, so much coming together, right? A confluence of factors which are all not pleasant, but not of our individual making, but factors that are coming together that are very supportive for the silver price and gold price. I want to read you a little update in terms of what the mainstream media, our friends, are saying about what happened yesterday with gold, silver as well. It says as of 4 p.m. Eastern Time, gold futures basis, the most active December contract is trading dramatically higher, up $58.50 and fixed at $1,941 per ounce. Can you believe that? It seemed like just last week we were hoping that gold would stay above $1,800 an ounce. We know it should be significantly higher. Same thing with the silver price. Silver had a 4% up day yesterday. We know those prices. In particular, the silver price should be up in the $30 or $35 range already, and it's going to happen. And don't forget, I'm going to give you a lot of the reasons why today in this video. Today's surge in gold pricing, but silver as well, is the direct result of attraction by market participants to move a portion, just a portion, into a safe haven asset. This is the direct result of the current geopolitical conflict between Israel and Hamas, which escalated tremendously on Friday. Look, we know what's going on over there, but I want you to think about a critical key, something that's going on right now that I didn't think of until I heard Vince Lachey talk about this directly. We have a shrinking portion of the world that is looking at the US dollar and US Treasury bonds as a safe haven, and they're looking for other avenues where they can park their assets during these times of great geopolitical strife, which we are not happy about. Let's get that groundwork laid right away, but where they can put their money to be safe. If you're in Russia, if you're in China, if you're in India, if you're in Brazil, those countries traditionally may have run to the US dollar. They're not doing that anymore. And if even just a portion of that money goes into the silver market in particular, you know, the entire output of the mines creates only $20 billion worth of silver per year. That's like a fraction of a fraction of a fraction of the amount of money that's going to be looking for safe haven status. And the same is true with the gold market. Just a portion of the money that traditionally would go to the dollar or treasury bonds could be finding its way into the precious metals market. And, you know, again, we don't like what's going on in the world, and we didn't create what's going on in the world, but we know one thing for sure, and that is that silver and gold have been the safe haven assets of choice for thousands and thousands of years. 4,000 or 5,000 years. Not like Bitcoin or cryptocurrency that maybe have been around for 500 months at the most, if even? No, what? What would that be, Ron? Maybe 1,000 months, right? We're talking about thousands and thousands of years of safe haven status, and with everything, think of that context of everything going on in the world, just a itty bit, just a tiny little bit of that money going to the silver and gold market could be explosive, okay? We've got war in Palestine. We've got war in Europe, okay? Israel. We have a potential for major conflict in Asia with China. Everywhere we look, think about where the world stands today compared to 5 years ago. And I don't want to scare you. I don't want to be a doom and gloomer. I don't have to be a doom or gloomer. Just turn on CNN or read what's gone on in the last 5 years. Think of those 3 areas: Europe, okay, Israel, the Asia with China. And then on top of that, think what else happened in the last 5 years. What other major crisis have we dealt with? Yes, the C-19 crisis. I was thinking of that earlier and I was taking a shower. It's like, how did all this stuff happen in just the last 3 years? Things are happening much more quickly, and they will continue to happen much more quickly and at a more severe level. So as the world, again, I want to hammer this point home because it's horrible news what's going on in the world, but we can't control that. What we can control is how we decide to safeguard what assets we have. And as all these things unfold, and as fewer and fewer people are looking to the dollar as the safe haven asset of choice, the logical recipient of much of those incrementally increasing funds would be precious metals. And did we see that on Friday when gold was up $60 an ounce at one point? I would argue that I think we did. Silver up almost $1 per ounce. Don't forget, our friend silver has been money held value longer than even gold. So it continues to get very interesting. Another key point that you don't hear a lot of people talk about, but we want to talk about. We know inflation is good for the precious metals. In the end, that's what the precious metals do. They protect you against inflation, against the devaluation of fiat paper, make-believe, unicorn fart dust. I can even say that, my basement dweller friends, and thank you all for being here, all 200 of you, on a Saturday morning. Wow, I'm the lucky one. Inflation, but nobody talks about what is this? What does this mean to you when you hear inflation? Yet, what do you think war does? It's a proven fact. If you look at any long-term chart, one thing besides all the other horrible consequences of war is inflation. War times always bring on inflation. And I want you to think about this as well. We were already in a really horrible spot. The Western economies, the United States, we were already in a horrific financial condition before all these wars broke out. What are we going to do, or what kind of a condition are we? We were already teetering on the edge potentially, but now the United States will be funding the European war that's going on, will be helping and funding the situation in Israel going on. What if something breaks out in Asia? Where's this money going to come from? It's going to have to be printed. It's always been that way. It's always been inflationary, and it could spell real trouble for the US dollar. We need to get some politicians in Washington who can get their darn act together. I'm telling you, Andrew Jackson, Thomas Jefferson, they're rolling over in their graves right now with the mismanagement that's occurred by our supposed leaders in Washington. Are we going to see escalation? Okay. Well, are we going to see escalation of inflation? What did we hear on last week about inflation? Inflation is going up. Okay. Are we going to see escalation in these conflicts? The United States is sending a second aircraft carrier to the Middle East area. It's not looking good. I don't want to be doom and gloom, right? We talked about the fact that big things were going to continue to happen, and they were going to happen at a continuing faster rate. Lynette Zhang talked about that when I talked with her 6-7 weeks ago, and it's happening right in front of our eyes. It's not pleasant. It's not nice to see what's going on in two parts of the world right now, but we need to be aware. And if you want to protect your assets, you know what you need to do. And this is a great chance for me to tell you, if you do want to get some silver or gold, if you're considering buying some silver or gold, check out Pimbex, Pimbex, Pimbex. I like to spell it, I like to say it, and I like to buy silver, in my case, from Pimbex. You guys told me about the company. I researched them, 6 months ago. I thought it was a great opportunity to buy silver, in my case, at a very good price, the lowest premiums I could find, and they fulfilled all my expectations. Pembex has great quality, great customer service, and their prices, in my opinion, are always, if not almost always, the best. So check out Pembex if you're looking to buy some silver, gold, or platinum. Now, let's move on. Here's some interesting, what will impact gold and silver? As we move into this next year, what do you think will impact the precious metals prices? The bond market, and we're going to talk about what's going on there because it is crazy. Inflation, we just talked about that. Inflation is not letting up. We are likely, a lot of people say we already are, moving into a second wave of inflation. And with all these wars breaking out around the world, with everything, we could be standing right now on the precipice of another major inflationary surge. Okay? U.S. government dysfunction. Our government is a mess. The Republicans, what they're doing is a mess. This is not a political show. The whole thing is a big, big, big mess. Don't forget, right? We gave these wonderful, responsible people in Washington an open credit card. We suspended the debt limit. We didn't raise the debt limit. We suspended it for more than another year going forward. They can spend as much as they want, and there's some crazy statistic I'm going to share with you in just a second about how they're doing just that. Yes, your money, my money, money you could be buying shares of First Mining Gold with, or buying silver from Pembex. No, your trusted politicians, for those of you in the United States. Actually, I'm in Canada right now. Canada, Toronto, believe it or not, for the next few hours. But your politicians are spending your money. They're having a great time doing it. When I tell you this latest statistic, it is jaw-dropping. Okay, get ready for your jaw to drop. And we need some thumbs up, guys. When we get to 100 thumbs up, I'm going to ring the mobile bell. So hang in there with me here. War, we talked about that. That'll affect the silver and gold price. Sorry, but it will. Okay? And what about debt? Right? What about debt? What about debt? What happens to you if you get in too much debt? You get in trouble. What happens to a country if they mismanage their finances? They get in trouble. The value of their currency. And in The Wizard of Oz, Jerome Powell has done a great job. My hat's off to the Federal Reserve for what they've done over the last 50 or so years since the United States temporarily went off the gold standard. President Nixon, 1971. My hat's off. The old Wizard of Oz, United States Federal Reserve, they've done a pretty darn good job, wouldn't you say? But guys, the gig is almost up. Thank you, Mike. Sorry, I can't see really well, for the super chat. I appreciate that. Super chats are super appreciated, super duper appreciated. I got to get a flight home here, you know? Never expected. But thank you for the support. That goes a long, long way. What about debt? Listen to this. Hold on to your jaws. Everybody, grab your jaws. In 4 weeks, the last 4 weeks, the U.S. debt has increased by over $500 billion. I first wrote that and I said, increased by 500 million. And I thought, that's a lot. And I thought, wait a minute. No, that's over $500 billion in 4 weeks. Okay? People are like, where are they spending the money? Is it on the wars that are going on in Europe? Guys, we have a war in Europe right now. People are dying. It's horrible. Absolutely. We have a war in Israel. You know, that's all they do on the TV is show gruesome video. I mean, you know, can you believe this is going on? And at the same time, our government is spending your money, my money, your kids' money. You're like drunken sailors. What does that do in the end? What does that do in the end? There's no other option. If you print a bunch of money, you make up, you dilute, right? You dilute. You got a bottle of whiskey and you mix it with another bottle of water, you're diluting the whiskey. It's the exact same thing that the United States is doing to the US dollar right now. There's a lot more to talk about, okay? The bond market. What does that have to do with the price of silver and gold? It has to do everything with the price of silver and gold. But let me tell you what BlackRock, the world's biggest institutional investor, they put the word institution into institutional investor. What do you think they said about the bond market? They said that the bond market rout is not over, that we are right now, people are starting to wake up and recognize we are having the worst bond crash in the history of the United States. And where are all those bonds? That's right, they're on bank balance sheets. They're in pension fund balance sheets. Nobody's recognizing it, but it's real. It's real. And I got the stats here. Hold on. Yeah. Banks alone, hold on to your jaw. Okay, banks alone have $620 billion of unrealized losses on their balance sheets. That means they've lost $620 billion in value. Okay, and they don't realize it. They're in la la land. They're at the country club right now. Okay, I just have a quick question for you. If the banks have $620 billion of unrealized losses, right? But if you show up and want your money back from the bank, they may say, well, that's part of the unrealized losses, so we can't give it to you. But I wonder, the $620 billion in unrealized losses, doesn't that match up with the over $500 billion of national debt that's increased in the last 4 weeks? Maybe they took all that money and shifted it over to the bank so they could cover all the mom and pop people like you, like me, like my parents, your brothers, your sisters, your kids, whoever, that have their money in the bank and think that it's safe, not realizing that the bank, when you gave them your money, they bought a bunch of bonds 3 years ago that could, at this point, be worth 50 or 60 cents on the dollar. But they may have done something else with your money besides pay their country club dues. They may have loaned it out on commercial real estate projects. They took your 100 grand or your million, if you're rich, right? They took your money and they're going to pay you 1%. And then they loan that money to some real estate guy who was going to buy an office building and make, 5 or 10% profit per year. The only problem is the commercial real estate market is crashing now too, and there's huge vacancies, so he's not making any profit on that piece of property that he bought with your money, and the value of that property has gone down as well. Somebody's trying to come into my room here, so I may have to shoo them away in a second. I told them I wasn't leaving just yet. I'm a little distracted. I apologize. I'm not in the basement. I'm in the bedroom here. So it's going to be an interesting ride as we move forward. Where will the money come from? Hold on here. Okay, this is interesting. This is something that is not you may not agree with the next thing I'm going to say, but as we've had this worst bond market crash in history, okay, will the Fed, and we have inflation going up, think about this, will the Fed use the war situation as an excuse for losing the inflation fight? Because guys, they're losing the inflation fight. It's a mathematical improbability. Will they throw inflation to the curb and say, whoa, we have to deal with this crazy stuff going on in the world, blah, blah, blah. That remains to be seen. But I think that's a real possibility that once they know and people, the conspiracy theorists out there, I'm saying that, I'm not saying I believe this, don't believe this, I just throw out to you all the different perspectives that I see and other people see as well. But a lot of the more conspiracy theorist type people will say, oh, they create crisis when there's, financial trouble. That in late 2019, we had some big issues in the banks, repo and reverse repo and all these things were blowing up, okay? And the market was blowing up. And then suddenly in March, there was this major health crisis. Are they using war now to avoid or to distract or to provide footing from which they could say something like, well, we're losing the fight on inflation, but be scared because the world's... Let's hope that's not the case. Okay, I'm not saying I think it is. I'm just giving you all the different perspectives. We got a lot more to cover, guys. We got a lot more to cover. Let me read this to you because it's interesting. This is from Reuters. And this shows, is the Fed ready to pivot? What's going to happen when the Fed pivots? Oh my gosh, hold on. I forgot. We got to 100 thumbs up. Let's get out the temporary bell. Okay. That's 10 rings of the bell, 1 ring of the bell for each 10 thumbs up. Guys, please give this a thumbs up. And hey, if you've not subscribed, I don't beg for you to subscribe very often, but I do put out new content every single day. If you want to keep abreast and you want to make me and CoinShop Chris gets happy about it too, please subscribe. Consider subscribing to the channel. Thumbs up are very helpful as well. Let's read the Fed. When the Fed pivots, is the Fed done raising rates? Are they telegraphing that they're done raising rates? Let's read something from the Philadelphia Fed. This is from Reuters. Reuters. Philadelphia Federal Reserve President Patrick Harker said on Friday he believes the U.S. Central Bank is likely done with its cycle of interest rate hikes. Let me repeat that. The U.S. Central Bank is likely done with its cycle of interest rate hikes. Yes, you heard that, and I read that correctly, amid an ongoing waning in price pressures. Quote, here's a quote, absent a stark turn in what I see in the data and hear from my contacts, I believe that we are at the point where we can hold rates where they are. Harker said that in a virtual speech, like artificial intelligence, to the Delaware State Chamber of Commerce. Where will all the money come from is what I'm asking. When the hens come home to roost, and they always come home to roost. I want to tell you a very powerful, it's been 26 days since I've reminded you of this. Right? And I think that you'll like this very simple statement, and it applies so much to what's going on in the world financial system and in the world of precious metals. Okay? Mathematics shows zero forgiveness on the altar of truth. Right? You rack up too much debt, you're going to pay the price. Okay? 2 + 2 always equals 4. Now, Jerome Powell had everybody convinced for the last, Jerome Powell and his predecessors for the last 50 years, that 2 + 2 could equal 5, or 2 + 2 could equal 6. But at the end of the day, mathematics shows no forgiveness, and those are the waters we are going toward. If you've ever been whitewater rafting, it's nice and calm for a while, and then you hit some rapids. And I think, possibly, don't make any financial decisions based on anything I'm saying. I'm just giving you my opinion, as somebody I love very dearly. They say, I'm giving you my opinion that's what we're heading. We're just now hitting the rapids, and they are class 4 rapids that we are heading into. We need to be prepared mentally and monetarily, because remember, just because we know that we're heading into rough times, when the rough times hit, it can be a very emotional period. I'm a very emotional guy. I'm a sensitive Sally. I've told you guys that, a delicate flower. That's why when you give me thumbs up, it makes me so happy. I'm like a flag blowing in the wind, okay? Thank you to all the moderators who are here today. If you, not the moderators, but everybody else wants to do something nice, say something nice about the moderators. Type 4 into the comments. That would really be cool to let them know that you appreciate what they're doing, because we want nice people here, and people that are joking around's fine, okay? Joking around's great. Just don't be mean and don't be too dirty, because we want this to be a nice productive area for all of us to come to, okay? Oh boy, we got more to talk about. We got more to talk about. How are you doing today? I hope, oh yeah, you're doing good, good, good. I was in kind of a bad mood when I woke up this morning. I already told you that. 4 weeks, all this debt. Hold on here. Okay. Oh, this is interesting. Jeff Christian from the CPM group. He doesn't like people like me because he's the smartest guy around, okay? And he doesn't not like me personally, but people that do what I do, that give commentary on the silver and gold market, because he knows everything, okay? And he's a smart guy, and we always want to consider what he is saying. But let me tell you, I was listening to him this morning, but he said something very interesting about gold and interest rates and the dollar, because all we hear is that, oh, if interest rates go up, gold's going to go down, the dollar will go up, gold will go down. No, guys, let's go back to you want to hear about astronomical returns in silver and gold. Go look at the 70s, and he brought up a great point that interest rates rose significantly from 19, and there's a kicker, there's a second level, 3D chess a concept we're going to talk about, but it's not that difficult. I'll make it simple for you to understand. Gold skyrocketed in the late 70s, okay? Interest rates were going crazy during that period. So it's not always the case that just because we have higher interest rates and a stronger dollar, that gold and silver have to go down. It's just not the case, okay? Investors were buying tons of gold during that period in the late 70s. And what's important is you need to understand why interest rates were up. And similar now to back then, it was because of geopolitical issues. We had the Iran situation. We had all kinds of situations going on all over the world. We can get into a situation where if it's not just monetary policy reasons why rates are going up, if we have other extenuating circumstances like more debt than we've ever had in the history of the world, more conflict going on than any other time in the history of the world, similar-ish scenarios to what we saw in the 70s, you can absolutely, and that's what Jeff Christian said, see periods of time where both interest rates go up, the dollar goes up, and silver and gold go up. And I have a sneaking suspicion that we might just be heading into that situation right now, okay? On the economic front, let's talk about a couple of interesting trends going on. This is from Reuters. Young people, are you young? How old are you? I'm 53 years old. How old are you? Put it in the comments. I always love to see, if you don't mind, I don't want any personal information, but if you don't mind telling me how old you are the other people, right? So we get a good feel for each other, get to know each other a little better. But what about the young people? This is from Reuters. And what is this telling us? It says, most young Americans have cut their spending in response to persistent inflation. But I thought the Fed had inflation under control, right? Okay. Over the past year, a Bank of America survey showed on Friday. Okay. Now we're going to talk about that in just a second, but I want to thank our other channel sponsor that makes this possible, First Mining Gold. I was actually here in Toronto meeting with the executive team, visiting one of their mines. First Mining Gold is a Canadian gold development company. They've got 2 5 million ounce projects right here in Canada. I'm right here at the vault. They've got that gold in the ground, okay? They're working on getting projects permitted. They're in an exciting phase where they're working on getting the permits and doing all the work that leads up to permitting. And I got a little secret for you. The big gold companies, they have not invested in their pipelines. The big gold mining companies, they're in a few years going to be looking for new projects. And I have a sneaking suspicion that companies like First Mining might just find themselves in the catbird seat because they check that box. They're going to have 2 of the largest undeveloped gold projects in Canada. Check out First Mining. And if you want to talk to a nice, cool, very intelligent, a guy who's been dealing with mining companies and mining stocks for many years, Paul Morris, his contact information will be in the description of this video. You can call Paul and ask him questions. He'll be happy to help you out. Now, young people are cutting back on their spending. Very interesting. I wonder why. I mean, I was here in downtown Toronto just yesterday walking around. Maybe it's because everything's so darn expensive. Then I realized all those prices were in Canadian dollars, and I did the math in my head, and you know what? It was still darn expensive. Just to get a burger and fries, or to do and I'm very frugal, as you know, to a fault. Susie will attribute to that. But I'm like, oh my gosh, $20, $30 just for some basic little amount of food doesn't make any sense. So we can understand these young Americans. 73% of Gen Z. What the heck is Gen Z? Is a millennial? I guess the Gen Zs are younger than the millennials. We're going to go with that. Between the age, okay, yeah, here we go. We're going to learn something together. Are you ready to learn something? Gen Z are people between 18 and 26. Really young people. How come the older we get, the younger these people seem, right? They have changed their lifestyle because of increased prices. According to Bank of America, they did a poll of more than 1,100, more than 1,100, so it might have been like 1,101, who knows? But nonetheless, yeah, people are pulling back. We're in a world of hurt economically right now in the United States. You know, if you're in Canada, if you're in the United States, probably if you're in Australia, the UK, it's everywhere. The Western economies are hurting, and it's the middle class that's bearing the brunt. Now, if you go over to a country like India or China, right? Their middle class, they're improving. Their attitude is much more positive and upbeat because from where they were to where they are now, they're much more optimistic. I was talking to John Little this morning. Yes, that John Little, yeah, that famous commentator on the silver and gold market. He was talking about in China, the demand for gold and how robust it has been. And I was telling him about the fact that, yeah, now the middle class people in China are buying gold beans, right? These 1 gram gold beans. And it's a phenomena, okay? Because they're coming up, they're doing better, they're getting wealthier. And the government, this is the interesting part, how different, this has everything to do with silver and everything to do with gold. How different is it over there that the government actually encourages the people to invest in gold? We know back in the summer, the PBOC made it very easy for people to convert their checking and savings account balances directly into gold. Now, the government is encouraging the lower and middle segment that maybe isn't so exposed to the banking sector to buy these little gold beans, little 1 gram gold beans. Google it for yourself after we're done here. It's crazy. And I know I'll talk about it for the third time because it's so exciting. If just 10% of the Chinese population were to buy 1 gold bean 1 time a month for a whole year, it would suck in the more than half of the entire world's gold production. And I'm going to tell you, because I went to a gold mine just the last few days. Gold is not easy to get out of the ground. Okay, this is not like, and I read earlier today, did you know this? Thank you, Don. Wow, thank you for the super chat, Don. I read this just earlier today, guys. 80% of the gold, they estimate now that 80% of the gold that's in the world has already been mined. When you're talking about gold that's accessible, we're running out of the stuff. You know the story on silver. $35 silver by next year. I know our good friend Buddy Rumble is calling for $30, $32 by the end of this year. What are we, in October? We've got 2.5 months. And Buddy could very well be right because the statistics on silver are even more mind-numbing. I think we could see $50 silver next year. And if we get there, who knows? We could get to that $65, $85 level. When we get to $85 silver, by the way, CoinShop Chris and I are getting an RV and traveling around the country to say hello because we may be wealthy landowners at that point. We'll see how that works out. So we may be coming to visit you. We may need to do an episode around basement in your basement. So I want you to be prepared for that, okay? I'd love to come to your basement. get a little live stream going, huh? Hey, thank you, Frank. Wow, precious metals and miners will prove to be better than tech investments. Yeah. Okay, so this week I spent a lot of time with some wealthy investors, okay, and some big analysts from big Canadian banks. And we talked about just that gold and silver and the precious metal mining stocks in particular, it is unbelievable how undervalued the precious metal mining stocks are. And when you compare the fundamental value that is included in what you're paying right now for most of these precious metal mining stocks, compare that to what you get if you buy Apple computer or Nvidia or Facebook or even Microsoft, the fabulous, what do they call it? Fantastic Seven, something like that. Guys, it doesn't even compare. I mean, with a lot of these companies, these mining companies, for every dollar you put in, you're getting, depending how you measure it, at least $1 in actual hard assets. And in many cases, you're getting more like $1.50, $1.60 in real assets. And some of these companies are in production and are making profit. Let me tell you something. Gold mining companies are making big, big money at the current gold price. Now, look, could we see a crash? Let's talk about that. Let's talk about that briefly. And, silver, but the gold price, we've seen this happen before during periods of geopolitical upheaval, right? Where the gold price shoots up and then boom, comes right back down. I don't know. Maybe I'm a blind optimist, but I just have a feeling. We've been through this so many times. Don't forget something very important when it comes to the precious metals prices. And gold is the granddaddy of them all. But when we talk about gold, we'd be talking about silver as well. Okay? Guys, gold has tried 3 times to break out above where it is. It's got the world's biggest cup and handle over a long period of time that we've ever seen. It's very rare on a price chart pattern that any asset ever try 3 times to break out. And it's even almost statistically not impossible, but very, very, very rare that it breaks out above that, okay, or doesn't break out on the 4th try, okay? We're in a situation, and that's why when we talk about $35 silver, $2,600 gold, is this guy crazy? I mean, what the heck? We're only at $1,950. Yeah, because when we get to $2,100 gold, we're heading straight to 26. That's my prediction. Because nobody is going to be up there looking, saying, well, everybody's going to be in the profit zone at that point. Everywhere else in the world, they already are. Japanese yen, China, they're near all-time highs in their native currencies. The only place, of a lot of the big countries where we're not at already all-time high prices in gold is, I almost said right here in the United States, but over there, over the border, back in the United States. I'm sorry for those of you just joined. I'm in Canada right now. This is called Ron's bedroom. It's what I do when I'm temporarily out of the basement. If Susie forgets to lock the basement door, I sometimes escape, okay? All right. Hey, guys, thank you for being here. I'll be back in the basement soon, most likely tomorrow. So look for me going live there. Thank you to the moderators. Thank you for being here. I forgot to ring the bell. 200 thumbs up. You're the best, okay? Thank you to all of you. Take care of yourself. Be as nice as you can to yourself first. I know that can always be hard. A lot of us are hard on ourselves. Try not to be too hard on yourself. And that way, that'll allow you a little space to be nice to other people. All right, I'll see you soon. Thank you. Yeah, you.